Thank you.
The price of gold is currently so high that some Australian mining companies are digging over old ground to make sure the pioneers haven't left anything behind. The price of gold is up around $1,540 an ounce, pushed there by fears of a Greek debt crisis. It's good news for Australian gold production, especially because investors consider it a safe haven investment since the global financial crisis. Here's Guy Stainer.
Get a bigger access in and haul more tonnes with more mechanised machinery. That'll lower our mining cost and will extend the life of the operation.
If that gold price stays where it is over the next few years, that makes the development of these projects quite positive, pending exploration success.
When it comes to finding gold, everything old is new again. Bendigo and Ballarat in Victoria were the heart of Australia's first gold rush of the 1850s and are now home to the gold rush of the new millennium. It's a 5-kilometre drive under Ballarat to get to the latest mine face.
Primary ground support is fibrecrete, which is basically a sprayed concrete.
The tunnels are less than 5 metres wide. A $2 million drilling machine is shoring up the mine with rock bolts before the next face blast takes mining company Castlemaine Gold 3.5 metres closer to what it hopes is pay dirt.
We generally do about 5 to 6 metres a day. Our first deposit is roughly around 600 metres away, so a fair bit of development to go there first and some infrastructure, but we're sort of aiming to hit that around in August sometime.
This mine is 540 metres underground, almost the very centre of Ballarat. These miners are working 24 hours a day, 7 days a week, 365 days a year, as Castlemaine Gold tries to cash in on record gold prices. Castlemaine Gold purchased the Ballarat mine last year for $4.5 million.
We did that based on around $1,100 an ounce gold price, so of course now having a $1,400 ounce gold price just makes that business decision even better.
You couldn't help but smile when you said the $1,400 gold price.
It's a nice number. If you can't make money at that in the current market, then it's probably going to be very difficult. It's a great price to have.
Castlemaine was banking on a $17 million a year profit from Ballarat over the next 2 to 3 years. It's now projecting a profit of nearly $30 million a year.
It's in a gold rush in the sense that they're now starting to get the re-emergence of the very small gold mines who are going back to old deposits that were uneconomic 5 years ago, probably became economic 3 years ago, and now they're coming into production.
This is the 63 South Drive and North Drive, and this is the area we're going to be developing shortly. Just watch your step.
Greater Bendigo Gold Mines is picking over the carcass of very old shafts and finding profit. There are no underground highways here. Everything's done by hand, and it's underpinned by a high gold price.
It's allowing us to reprocess old tailings around the mining areas here in Inglewood. We're looking at other old tailings areas, so effectively very low-grade material that may have been processed once or even twice in the past is allowing us to provide a cash flow to the company.
Even the current hand operation is a money spinner. This cart has 650 kilograms of rock with a gold value of about $2,000. Similar activity at goldfields around the country has helped elevate Australia to the world's second largest gold producer behind China. But the good times won't roll forever.
We're probably nearing the highs in the gold price, and for a number of reasons we now expect gold perhaps to start drifting back.
Although consensus can be like gold, an elusive commodity.
So I think over the next 12 months we will probably test higher prices, perhaps even as high as $1,700 or more.
I don't think the gold price is going to fall in any sort of calamitous way. What we're talking about is an easing of the intensity of investor demand for gold and a gradual easing in the gold price over perhaps a period of 3 to 4, 5 years.
Even if that's true, the current price is funding development, which will make gold mines more sustainable if and when times get tougher. Greater Bendigo is planning an expansion into open cut mining at Inglewood that would reduce costs and thereby reduce the company's reliance on high prices.
We're looking at maintaining a fairly heavy development and expansion phase over the next 6 to 12 months. Depending on the success of our deeper exploration, we could see a mine life of 20 years here.
Still, price uncertainty fuels a desire to strike while the ingot's hot.
We hope there's more there, and that's our plan, is to find it and mine it.
And that's the program for tonight. We'll be back at the same time tomorrow, but for now, good night.